Now let's go through a question with current purchasing power. And when we go through this, what you should do is to try and figure out the difference between current purchasing power presentation and current cost accounting presentation. Historical remains the same. Like I said, it is what we know. Okay, so let's go through this question quickly. Divock Limited was formed on 1st January 2019 with a fully subscribed stated capital of 2.4 million Ghana, with the object of selling Samsung LED flat screen TV sets of a standard type. On 31st March 2019, an interest-free loan of 240,000 was raised. On 1st January 2019, a warehouse with a 30-year life and no residual value was purchased for 300,000. On the same date, 1,000 TV sets were purchased for 2 million. During the year, 800 inventory units were sold at an average price of 2,500. Expenses of 100,000 were paid during the year. All transactions were for cash. Sales expenses accrued evenly throughout the year. The loan remained unpaid as at 31 December 2019. A general price index moved as follows. So you have indices for the various dates. Required. Prepare a statement of profit or loss for 2019 and a statement of financial position as at 2019 using both historical cost accounting model and the current purchasing power accounting model. So here you can see that you've been given the indices. And what you should know is that with this, you must learn to apply the price index and the CPP index. CPP index is equal to index at the statement of financial position date. Index at statement of financial position date over over index at the date of entry. Date of entry. And here we mean entry into the financial statement. That's why we have the different dates for you. So you have to identify that. So that's what we are going to use in computing our current purchasing units. All right. As usual, prepare the historical statement. Prepare the historical statement. That by now should come handy. If you go through this question, you will be able to prepare your historical statement of profit or loss, for example. You need your sales, and you were told that 800 units were sold at 2.5. So that gives you your sales. Then you need your cost of sales. Now, business started 1st January, so we cannot talk about opening inventory. So your purchases, 1,000 TV sets were purchased for 2 million. If 800 were sold, then 200 units were left. So that will be your closing inventory, and that will help you to get your cost of sales. Yeah, continue. Then you have your expenses. So you have expenses there, and you will have depreciation. Never forget the issue of depreciation. And when it comes to depreciation, you are going to use the warehouse. This is an asset. It was bought for 300,000. Useful life 35 year, no residual value. You see the way we are going with all this, and that is for your profit or loss. You should be able to do that. So pause, do that first. Then you go to the next slide, and the solution is there. And then you will be happy that you were able to get it right. So do it first. And if you do, you check, then you can mark yourself. If you don't get it, it's okay. You tried. You look at the solution, and then you correct yourself. You use the capital. This becomes items for your statement of financial position. This is your share capital. That's your capital for statement of financial position. You have loan for your statement of financial position, and then you have the carrying value of the warehouse, cost less accumulated depreciation. You will have your inventory. Then you have cash. So you are going to build cash from all this information and get your cash balance as well for your statement of financial position. So we have the historical cost accounting statement of profit or loss, like we discussed. 2 million revenue, purchases 2 million, closing inventory 400. How we got it, you know. If you are in doubt, go back to the question. The 2 million purchases is 800 times. And then the purchases you were given in the question. And then the closing inventory will be 200 units times. Okay. Then you have your gross profit, expenses, and depreciation. 290 net profit. We have. And then the warehouse, the carrying value, the inventory, the cash. You have to build the cash. And your share capital too, for your net profit will come in, and your loan. This we know. If you cannot prepare this, please learn to prepare it. Then you take the historical financial statement, and now you impose the CPP financial statement on it by indexing all the items. Look at it. Revenue. Your revenue. The historical is 2. You index it, and you are using the average. So this is the index for the 31st December 2019. The statement of financial position date, and the date of entry, because it's revenue and it cuts across, like from January to December, you are using the average index. Average index. Your cost of sales, purchases, look at the date it came, and that is the date of entry and the statement of financial position. Look at your closing inventory. You are left with 400. Again, the date of entry, and this is the statement of financial position, date of entry. You have to pay attention to this because that's what makes the difference. Then your expense, again, you might be incurring expenses from January to December, so you use the average. And then the depreciation based on the date of entry of the asset, which is the beginning of the year. And therefore, at the end of the day, for CPP, you calculate what is called loss, net holding loss on monetary working capital. Under CPP, you identify monetary and non-monetary. With the non-monetary, we will index them, but we will not index the monetary. But we will, however, find the loss for holding the monetary. And that's what will bring you the 220. So we'll see how we get the 220. Your statement of financial position under CPP. Warehouse carrying value is based on the 390, and its depreciation is 13. Here, the depreciation is 13. You index the warehouse. You index the warehouse, 300,000. Okay. Then the inventory, the closing inventory is indexed. You can always come back and look at it from the income statement. Then you build your cash account, and you can see that it's the same as the historical cash account, 2240. Let's go under historical. Historical cash account is 2240. It is monetary. You do not index it. In CPP, you separate the monetary. You do not index the monetary. But we will do an adjustment in order to determine the loss for holding the monetary. Yeah, okay. But you report it as it is cash. Then your share capital. Now, this is 2004, the historical one. Its adjustment is the 720. This is so you can show the maintenance reserve, because this is just this 2004 and 270. Try to index the share capital. If you index the share capital, the entry is 110 and the statement of financial position is 143. So 143 over 110 times 24 will actually give you 3,000 something. And the difference, we are showing the historical one and what is maintaining it. The difference is what gave you the 720. And therefore, that's what is shown in the calculation here. Okay, so this is what I'm explaining. I'm saying if you take the share capital 2,400 and you index it by 143 over 110, you will get, please take your calculator and calculate it just like I am about to do.